Hello, today is Tuesday, June 2nd, 2026. Here is your daily signal. According to Fortune, Russia is warning that escalating war costs are ravaging its finances, just as Ukrainian drones gain tactical superiority and send Russian forces reeling in a new phase of combat. The Russia-Ukraine conflict, which began in February 2022, has been shaped by rapid advances in military technology, with drone warfare emerging as a decisive factor. Both sides now deploy a variety of unmanned aerial vehicles, directly impacting logistics, surveillance, and frontline engagement, and contributing to increased demand for drone manufacturing along with shifts in military expenditure. The Ukrainian armed forces are deploying Turkish Bayraktar TB2 drones and their own domestically produced UAVs, while Russia is relying on Orlan 10 drones and collaborating with defense giants like Rostec, where manufacturers such as Ukr Systems and Kalashnikov Group play key roles. Government agencies, including Ukraine's Ministry of Defense and Russia's Ministry of Defense, have actively coordinated procurement and deployment. On June 1st, Reuters reported Ukraine unleashed over 500 drones in the Donetsk region, causing disruptions in Russian supply lines. Defense News noted Russia's accelerated production of loitering munitions, aiming for a 40% increase by the third quarter, while the Kyiv Independent highlighted Ukrainian strikes on a Russian fuel depot in Belgorod, resulting in economic losses estimated at $17 million. In the near term, increased drone usage is set to escalate costs for both sides and intensify strain on defense budgets and procurement cycles. Medium term, both countries may see rapid growth and innovation in their domestic drone industries. Persistent supply disruptions and infrastructure damage could impact commodity prices and civilian economic stability across affected regions. Finally, the shift in military tactics towards widespread drone adoption may prompt broader doctrinal changes among NATO and neighboring states. Next, we move to consumer stocks and post-Iran peace negotiation market dynamics. Business Insider reports that Barclays sees a short squeeze brewing in selected sectors, as investors who fled consumer stocks during the Iran conflict may now rush to buy back shares after the peace deal. A short squeeze occurs when bearish investors are forced to cover their positions by buying shares as prices rise, amplifying upward volatility. This week, traders and funds rapidly unwound short positions in major consumer companies following peace negotiations between Iran and Western states that began May 31st. Companies like Nike, Procter & Gamble, and Walmart are at the center, with key institutional investors BlackRock and Bridgewater Associates also heavily involved. Regulatory bodies such as the SEC and FINRA are closely monitoring the developments. In the aftermath, on June 1st, Procter & Gamble shares surged 6.4% after shorts were covered, with Nike Inc. up 9% intraday as hedge funds reduced bets against the stock, according to Reuters and Reliable Finance Press. The near-term outlook suggests further volatility as remaining short sellers unwind positions, while the medium term sees institutional investors shifting toward tighter controls and more robust risk management. In the short term, spikes in trading volume could present temporary liquidity challenges for consumer stock shares. Lastly, New Scientist highlights a breakthrough. The horror game Quantum Backrooms generates eerie maze-like rooms using quantum computing, marking a new frontier in video game design. Quantum computing leverages quantum bits, or qubits, for ultra-fast computations, and procedural generation allows games to create dynamic content algorithmically for increased replayability and reduced manual workload. Since the early 2020s, quantum-enhanced algorithms have attracted significant interest both academically and commercially, and the video game industry, which generated $184.4 billion globally in 2023, is keen to adopt technologies that boost creativity and efficiency. Google Quantum AI and IBM Quantum are pioneering research on quantum simulation for game development, with major studios like Ubisoft and Microsoft experimenting with quantum algorithms to generate terrain and narratives. Academic labs such as MIT and ETHC-Rich, alongside startups like Quantum Motion and D-Wave, are actively developing quantum-powered procedural tools. In the near term, hybrid quantum classical workflows could enable more unique and complex worlds with fewer resources, and in the medium term, widespread adoption of quantum hardware could drive real-time narrative generation beyond the limits of current AI. These advances may spur demand for new programming languages and specialized talent, while also raising regulatory and intellectual property questions as quantum-generated content blurs creative boundaries. Now, onto the markets. Germany posted a modest rise of 0.12%, with EWG closing at 43.48, while EWD slipped 1.25%, highlighting mixed performance among German equities. France edged down 0.33%, and EWQ ended at 45.82, with no clear standout moves. United Kingdom declined by 0.51% as EWU finished at 46.69, reflecting limited upward momentum. Italy dropped 0.17%, but EWI maintained month-over-month gains of over 5%. Spain fell 0.76%, with EWP closing at 57.47 despite positive momentum over the month. Netherlands rose 0.63% today as EWN outperformed, posting nearly 9% monthly gains. Chile fell sharply by 2.2%, making ECH the top international laggard for the day. Belgium moved up 0.30%, led by EWK closing at 27.04. Australia slipped 0.63%, with EWO closing at 40.93. China large cap advanced 0.83% today, but FXI showed losses over the past month. Japan finished nearly flat, up 0.03%, with EWJ holding gains of 5.5% month-over-month. India dropped 1.17%, reflecting wider declines in India. Taiwan surged 3.54%, with EWT closing at 106.42 and strong momentum continuing. Hong Kong fell 0.43%, EWH lagging well below last month's level. Singapore rose 0.71%, with EWS closing at 29.7. Indonesia gained 1.01% today, but IDX is down about 15% for the month. Malaysia ticked up 0.18% as EWM closed at 28.62. Saudi Arabia dropped 1.78%, with KSA closing at 38.06, reflecting softness. Arab Emirates fell 2.66%, and UAE closed at 19.01. Qatar lost 0.83%, while Kuwait ended at 19.07, maintaining monthly gains. Israel dropped 2.72%, and EIS closed at 133.94 despite a positive month. Kuwait slipped 1.21%, KWT closed at 37.92. Africa retreated by 0.68% as AFK finished at 27.48. Gold fell 1.40% and GLD closed at 411.26. Silver declined 0.97% and SLV ended at 67.67. U.S. oil spiked 4.97% today as USO led commodity gainers. Platinum was unchanged. Copper climbed 2.83%, continuing strong momentum. Natural gas dropped 3.26%, notable declines for UNG. Corn slipped 0.17%, and wheat ended down 0.29%. Uranium dropped 0.43%. LIT declined 1.22% on softer lithium moves. In favorites, Oracle surged 9.9%, Axon and Nvidia up over 6%, while Marvell and Microsoft posted solid gains. AMD and Apple slipped 1.1% and 1.8%. Amazon fell 3.46% and Low lost 3.1%. Semiconductors as a sector rose 0.5%, with stocks up 23% for the month. The S&P 500 index gained 0.3%, while real estate lagged by 1.6%, with XLRE closing at 43.27. That's it for today. You can find more news and details on our website. Goodbye.